Today I'm joined by financial expert Michelle McGarr.
Hi.
And we'll be discussing tax on investments. What are we going to get into today?
Well, we're going to talk about all the different types of tax you unfortunately have to pay if you're doing well in the stock market, and also talking about how you can maybe reduce those taxes as well, hopefully making tax a little less taxing for investors.
Absolutely. Let's get into it. So there's a lot of taxes linked to investing, but they might not all apply to each individual investor. Let's start with capital gains tax, for example.
That's a big one. It's the tax that most people have heard of as well, capital gains tax, or CGT for short. And that basically is something you have to pay when you sell something that you've made a profit on, essentially. You will realise a gain, as they say in financial circles.
Great, so that's CGT, but how about dividend tax?
So dividends. Dividends are a payment that some companies make to their shareholders. So what they do is they pay out a proportion of their profits to shareholders. Shareholders are the people that own the shares, so the investors that hopefully are watching this video today. And dividends can be a nice little, sort of income spinner really, because they can be quite regular and nice little bit of cash in your pocket. But you are taxed for this kind of perk that this company throws off, and you have to pay dividend tax, unfortunately. But unlike capital gains tax, which is taxed of its own accord, dividend tax is taxed as an income rather than a gain.
Great, got that, but there's one more tax we need to cover, and that's stamp duty reserve tax. Talk to us about that.
Yeah, most people will know stamp duty. They'll think of when they buy a house, you have to pay stamp duty, and nobody likes that tax just for buying something. Well, unfortunately, when you buy a share, there's also a stamp duty reserve tax, which is basically a 0.5% tax that the HMRC put on the buying of shares. So you don't pay stamp duty on shares that are listed overseas, say in the US, and you don't pay stamp duty on ETFs either, as long as they're domiciled overseas, even if they're listed in the UK, which most of them are.